Hi everyone, good morning. Welcome to Stocks Investing Science. So in this episode, we will discuss on the budgetary implications and budgetary allocations and the financial assistance that were provided by our honorary financial minister in the recent budget, which was announced in the 23rd of July. As you have seen in the recent past, the companies that were involved in the breeding of the shrimp are hitting up the all-time highs. So in this video we will discuss on the budget impact for the Indian shrimp industry. So we will discuss on the important updates that were provided by the financial minister in our in the budget. So yeah, we will go through all the important updates that were provided for the shrimp industry. So as you can see, they have to give the boost for the shrimp export and production. The government has given a financial support for setting up of a network of nucleus breeding centers for shrimp brood stocks will be provided, and financing for shrimp farming, processing and export will be facilitated by NABARD. So this is done to to boost the export as well as the production of shrimp in India and to export it across the world. So and also there was other updates in the budget to for the marine products as well. So I'll just read it out for you to better understand. So India's sea exports in the last financial year has touched an all-time high of more than 60,000 crores. So in that, frozen shrimp accounted for about 2/3 of this export. To enhance their competitiveness, I propose to reduce BCD. We will come to that in a bit. On certain brood stocks, polychaete worms, shrimp and fish feed to 5%. And I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. This is done by to improve the marine related products to grow their manufacturing or the breeding purpose. The government is encouraging to give them good support. So as you can see, the shrimp exports have increased significantly to 40,013 crores in 23-24 from 8,175 crores in 2011. So it's like in the past 10 to 12 years it has grown by almost 3 times. So that's a good growth in the shrimp export sector. So to come into the custom duty rate changes, like I was telling, the BCD is base custom duty rates. So for that, the government has reduced the custom duties to reduce the input costs and deepen value addition and promote export competitiveness, and correct inverted duty structure, and to boost domestic manufacturing for the for all the aqua farming and marine exports. As you can see, the prawn and shrimp feeds, the custom duties have reduced from 15% to 5%. That is same for the fish feed as well, but we will concentrate mostly on the shrimp in this episode. So and also there are other commodities that were involved in the manufacturing of prawns and shrimp feed. So these are the the chemicals or the inputs, the mineral and vitamin premixes, krill meal, fish lipid oil, crude fish oil, algal prime, and then algal oil. So these are the some of the important inputs for the manufacture of shrimp's feed. So these were had the custom duties previously from 30% to almost 5%, that were changed in the recent budget to zero custom duties for them. So this is some of the important aspects that were covered for the Indian shrimp industry in the recent budget that was announced by our financial minister. So now let's look at some of the important the keywords which are in the budget document. So one is the brood stocks. What is brood stock? A brood stock or brood fish are a group of are those the group of mature individuals used in the aquaculture for breeding purpose. So these are actually the matured parents which are used in the breeding purpose of the shrimps and all the aquatic marine animals. So those are called as the brood stock. So the brood stock is very important in terms of in the growing for the breeding purpose as well. So there were like few qualities that were are very important and for the brood stock. So these are the parameters for the evaluation of this brood stock. And these parental brood stock should be bigger in size without any damages in their body. They should have good pigmentation, and they should have the clear eyes and open tails, and it should be broad as well. And then it should have the complete antenna without any damages or cuts, and its full stomach should not have any white patches, and the ovaries should be occupied in the full abdomen portion, and the thylicum loaded with the spermatophores. So these are some of the important qualities all the companies look at before importing them for the breeding purpose. So there were a few important brood stock where the government has reduced their custom duties from 10 to 5. These are like two of them. One is live ASP of Vanamai shrimp, and the other one is live black tiger shrimp. I guess you might have already heard the black tiger shrimp, which is very famous across India, and the brood stock usually imported outside from the India to for the breeding purpose. So on those the brood stocks, the custom duties has reduced from 10 to 5. So that's again the important thing. So this is the important aspects for the Indian shrimp industry and the budget implications on the Indian shrimp industry. Now let's move on to the companies that are involved in this sector, and we will analyze their basic fundamentals and their shareholding patterns and technical analysis, and also some of the valuation aspects as well in this video. So there are few companies involved in this sector are Avanti Feeds, Apex Frozen Foods, Waterbase, King's Infra, and then Zeal Aqua. These are the important companies that are operating in this shrimp sector. So we will go through one by one. First we will look at the basic fundamentals, and then we will look at the technicals for them as well. So now let's get on to the screener.in, so that we will have a brief idea on their the fundamentals. So first we will start with the Avanti Feeds. So as you can see, in the recent they had there is a lot of optimism shown in the stock market for these kind of companies, as we had seen a good budgetary allocation for this kind of company. So yeah, so we'll start with the Avanti Feeds now. So this is almost 10,000 crore market cap company, and has having almost 29 PE. And to give a brief introduction on this company, Avanti Feeds Limited manufacture and sell shrimp feed and exports processed shrimp. So shrimp feed business accounting to almost 80%, 80 to 81% of their revenue, and this is one of the largest producer of shrimp in India, accounts to almost 45% of the shrimp exports. So now let's look at some of the aspects such as sales, profits, and other things. So let's look at some of the quarterly results. So in the last quarter, numbers have grown in terms of sales. The operating margins are also improving for the company, and operating profits are also increasing. Even in the net profits, the numbers are increasing from the last few quarters. Numbers are in the 2021 there was a dip, and then 22 to 2022 it has improved a little bit, and then started improving in the last in this present year. The company is progressing with good numbers. So yeah, so even the net profits are growing quite well, and yeah, and there is upcoming result date for the company is 5th August. So watch out for that. The quarterly results that I will be posting on 5th August. For that, please do subscribe to my channel so that you will have full understanding and the important updates for the company and other companies as well. So yeah, so now let's look at the year on year growth for the company. So from last year, from last 10 years, let's look at the revenue. So sales have increased from almost 1093 crores to almost 5300 crores. So yeah, so in the last 5 years, sorry, the 10 years, it has grown by almost 5 times in sales. So operating profits margins also grown by almost 4 times. So operating margins are like quite stable. I will say maybe in the last two years the company has not performed well in terms of operating profit margins. So yeah, that's the one thing. Then the profits did grow almost by 4 to 5 times. So just look at the compounded sales growth of last 10 years is by almost 17%, and last 5 years is by almost 9%. So yeah, the compound sales growth is almost like 9 to 10%. Then coming to the profit growth, so in last 10 years profit has grown by almost 17% CAGR. So that's a good thing. And then let's look at the stock price CAGR. In last 10 years it has grown by almost 30% year on year. So that's the CAGR for in the last 10 years. In the last 5 years it has grown by almost the 18% CAGR, but last 1 year it has given almost 86% of returns. Let's look at the return on equity. So it has grown by almost 22% in last 10 years. Last 5 it has grown by almost 17%. In the last 3 years it has grown by almost the return on equity coming to almost 14%. Now let's move on to the shareholding pattern for the Avanti Feeds. So the promoters are holding almost 43% of stake in the company, and the FIIs are continuously increasing. If you can see from the last few quarters, they have increased their holdings from 13% to almost 14.2%, whereas DIs are kept on decreasing their holdings in the Avanti Feeds from almost 9% to almost 6.4%. Government has also has a stake in this company, which is accounting to almost 2.7%. And the publics, the retailers also are increasing their the holdings in the company. Maybe that's not a good sign for the company. So that's the shareholding pattern. And let's look at the valuations by looking at the P ratio for the company. We can see the technical chart. It is from 2017. It has not performed well in terms of the stock price, but let's see how it is in last 5 years. It has almost peaked now. So let's see the P ratio for the company. P ratio is almost standing at 29.7 now, but looking at the the last 10 years, the peak P price to earning ratio the market has given in the optimistic value is almost 40. Then it is like 32, 33. Then now it is 29.7. So in terms of price to earning, comparatively it is trading at higher P for Avanti Feeds, because it's always danger to invest in the company at the peak PE. So that's one thing, but there is optimism in the market. We'll see how it is in the technical charts. That's what for the Avanti Feeds. Now let's look at the technical charts for the company. So let's look at the monthly. It is coming to, it is like I said, it is given a peak. It has peaked at almost 2017. Now it's still trading at almost a discount of 23%, but we'll see. So technically it's given a good, it's giving a, so currently it is in a uptrend from almost 2023. So let's see the weekly charts. So weekly, and then if you can see the here the volumes are giving, that's why the company is giving are able to give the breakouts as well. And recently also you can see that there is a trend line. It has given a breakout of that trend line and moved higher as well. So currently Avanti Feeds are trading at the resistance now. We expect it to to consolidate for a while, and we'll see the Fibonacci. It's coming to almost see if it is coming at this range. I feel I will try to add little bit of my holdings into this company, because like I said, it is trading at higher P. If that was lower, then I would have given more allocation. But yes, as there is optimism and a good budgetary boost as well, we can think of adding at this level. Maybe in a small chunk we will start adding first at these levels. One is this one. I will add my second chunk in this level, and third chunk will be almost at the somewhere around 350 to 320 range. So that's the three levels that I will be looking for the Avanti Feeds. Currently it's standing at the resistance level. Let's see how it consolidates or gives a breakout. Maybe we'll see how it operates. Now let's look at the second company, that is Apex Frozen Foods. We will as the video might go a bit lengthier, but we will cover all of them. Maybe a brief introduction on the company. Apex Frozen Food is an integrated producer and exporter of shelf stable quality aquaculture products, and is one of the leading producer as well as exporter for processed shrimp. Began its operation in 1995. This company operates comprise hatchery, farming, pre-processing, processing, exporting of shelf stable quality aquaculture products, that is the shrimp. So now let's look at the basic fundamentals. Company is at standing at almost 972 crores of market cap and having a stock PE of almost 66, having a return on equity of 3%, then ROC of almost 5%. Yeah, so the ROC as well as ROE is not good. I mean, having 5% is not at all good. So we'll come to this in a bit. Now let's look at some of the important aspects. In the quarterly results in the recent quarters, the operating profits are reducing, the operating margins are reducing. We'll see the net profits. Current in the recent quarter, it has given a negative net profits, almost 0.3 crores. So year on year, let's look at the numbers. In the last 10 years, it has grown by almost not even 1x. It has been. It's okay. Let's see the numbers. Sales have not grown quite a bit. The operating margins are again, it's grown by almost 33 to 41. Operating margins are also at the lowest levels of 6 to 7%. Net profits has grown. It's negligible growth, I will say, but yeah. Currently, in the recent times, it did not perform well. But let's look at the sales growth year on year. It has grown by, I mean, the 10-year CAGR, it has grown by almost 5%. In the last 5 years, it has not performed well, even in the last 3 years as well. Let's look at the compounded profit growth. In the last 10 years, it has grown by 1% CAGR. But in the last 5 years, it has given a negative 25% of profit growth. In the last 3 years, it is giving 31% of negative growth in terms of profits. Stock price CAGR is coming to 6% grown in last 5 years, negative 6% CAGR in last 3 years. In the current year, it has given 42% of rally. So return on equity in the last 10 years, it is around 13%, 5% and 9% in last 5 years. Now let's look at the shareholding pattern. So in the recent quarter, the FIIs have added a good number of shares to almost 1.2% in their holding. Even the DIs are having a good number of holding. Retailers are reducing their the stake in the company from 27 to 25. That's quite a good thing for the company. So in terms of P, it is again trading at higher P. Now it's almost 66. Peak P the market has given is almost 80. So median P is coming to almost 18.4 in the last 10 years. Yeah, peak, I mean the last the median PA for last 3 years is coming to almost 23. Yeah, so currently, like the optimism is high and the company is trading at a higher P as expected. So we'll see how it's there in the technical charts. Just a minute. So it is given so if you see from last like almost 4 years, it has not gone anywhere. It is trading at this range of 432 to 200 range. So yeah, that's it. That's the thing. Stock is given a breakout of this trend line and moving higher. We'll see if this corrects and retraces to somewhere in this range 260 to 280 range, so that it will be good place to add our first chunk of investment. Apart from that, no, I don't think at this current price it is definitely trading at a higher price. We'll see that if it retraces to like this range 280 to 260, we can add our first chunk of investment. I will be doing so, so I will be telling the same thing to you as well. Now let's look at the other company, Waterbase and King's Infra. We will cover these two, and then we will not be covering the Zeal Aqua, as the video is becoming very long. So yeah, Waterbase. So currently Waterbase is trading at 422 crores, small company. In terms of market cap, this company is incorporated in 1993. Waterbase is in the business of shrimp feeds, shrimp aquaculture, and then shrimp hatchery, and it is a part of KCT group. I'm not sure what that is. ROCE is not good, ROE is not good. Operating profits is negative, net profits is negative, OPM is a negative. In the recent quarters, the sales are reducing. That's not good for company. In the last few years it has performed nice, but the operating margins are like gone to hell after hell, like minus, negative, and the company is showing negative net profits. Not good. So like I will not cover any of these topics because company is not performing nice, but and investing in this company is your call. Promoters is holding almost 69%, 30% in public. No FIIs or DIs in this company as yet. So yeah, that's the basic fundamentals. Now let's look at the PE. Anyway, when it is in the negative, we will not show any PE. We'll see the technical charts. Am I opening the right one? Let's see. Waterbase Limited. Yeah, this is the chart for Waterbase. These are like it looks like these are the beaten down stocks from last 4 years, but having said that, the numbers are not proved even in that sense. So we'll see how it is, but in terms of fundamentals, I don't think that's good numbers that is published. We'll see in the coming quarters how the company performs. Then based on that, I will decide my investment. So currently now the company is at the resistance as well. So we'll see how this goes moving forward. Now let's look at the King's Infra. This is one of the interesting company that I am looking for. King's Infra Ventures. Yeah, this is a company incorporated in 1987. King's Infra Limited is in the business of aquaculture as well as infrastructure. So company covers entire aquaculture value chain, right from the brood stock to packaging, branding, as well as marketing the end product. So company is at market cap of 480. Then stock P is at 61. ROC is okay, nice one. 17 and 16, and quite okay. I don't mind like at that range as well. We'll see the other values. Quarterly results, operating profit margins are consolidating. Sales are increasing, but not at a higher percent, but okay growth, I can say. Coming to the net profits are also consolidating at 1 to 2 crores around. So year on year, company has given a good growth in terms of net profits. Even the operating margins are increasing, and then the operating profits are increasing, the sales numbers are increasing, good numbers. Look at the sales growth in the last 10 years, it is given 40%. Last 3 years it's given 34%. Profits same in the range, and 3 years profits are at 76% CAGR. Even the stock price has given the same kind of values, 38 in last 10 years CAGR, 52 in last 5 years CAGR. Good numbers, I will say, definitely for the company. Even the ROE is improving right from the last 10 years. If you see last year, that's what we want in such companies where business revival is happening. So let's look at the promoters and public. There's no FIIs or DIIs till now. That's nice. Let's see how it goes moving forward. 68.7% from promoters, 31.2% from the retailers. Let's look at the technical charts for King's Infra. So it has given a consistent returns over the years. In the last 2 months itself, it has grown by almost 60 to 70%. Okay, 47%. Nice one, nice chart. Let's see. Good volumes in the recent times, but yeah, that's looking nice in the charts. If it consolidates to this level, definitely we can think of adding at this level. Yeah, this is good for investing at a good range of 180 to 160. I will be doing so. So that's it for this video. We covered the budgetary impact and budgetary allocation for the shrimp industry, and then we discussed the custom duties which is reducing for the sector, and then we discussed about the brood stock, and then we discussed about the companies that are involved in this sector, and these are the likely beneficiary for the scheme that the budget has been on budget announcements. So we'll see how it pans out in the recent times or in the coming quarters. So yeah, that's it for this video. If you like this video, please do hit the like button and subscribe to my channel, and also press that bell icon so that you will not miss any of my future updates. So yeah, that's it for this video. Thank you so much for watching. I'll see you again in my next video.